We're here in Monte Carlo for the Rendezvous de Septembre. For Invest TV, I'm Richard Banks. And I'm joined now by David Flandro, Head of Industry Analysis and Strategic Advisory at Howden Re. David, great to see you again.
Thanks, Richard. Nice to be here.
So, unusually, we're talking to you at the end of Monte Carlo.
Yes.
Normally, I'd ask you what messages you're bringing to the event, but perhaps you could tell us what you've seen this year and what the themes have been.
Okay, well, I can tell you the message that we brought to the event. We published Beyond the Horizon, Shaping the Future of Risk. And, you know, the actual theme of the report is just that. It is how do we work with reinsurers, capital providers, and brokers to create the products that bring the capacity to the market that get us over the horizon. Because, you know, the industry really has had a narrative for the last 2 years, since 2022, when we had all that capital impairment, when we had interest rates go up, we had inflation go up, and then attachment points went up, and we had Hurricane Ian. I'm not getting all of these in the right order. Sorry, it's early. But all of that meant that we had a massive increase in property catastrophe risk-adjusted reinsurance rates, but not just property cat. Really, across all lines, we've been in this hardening and then hard market for the last 2 years. And it has been, if you will, capacity short, certainly for the opening stages of it. Well, now we've really gotten to the top of that S-curve, and we're trying to understand what happens next. What is it that we can do to get beyond? And so we're looking at all the risks that are in the market now. There's SRCC, political violence, secondary perils, German flood, Italian hail, all of those things, not to mention casualty reserves. And, you know, let's face it, we're in an environment geopolitically that's quite dangerous. And so risk premia are heightened. And in that event, what that means is we have to figure out how do we create the capacity that can bring the market forward. And that's what the report is really about. So,
And in terms of the conversations you've been having here in Monte Carlo with people who've read your report, what's the response been?
well, it's been really positive because I think that we are in an environment where reinsurers are creating enough economic profit, and they have done for the last couple of years, that they can now move to the next phase, which is helping their cedents, helping their clients. And they can do so while still experiencing what I think will be profitable growth. So that's all very good. If I had to pick one topic that people have been talking about the most, out of all those four, it would probably be casualty. Casualty, particularly accident years 14 to 19 in the U.S. with other liability occurrence and claims made, commercial auto liability, and not to mention reinsurance liability. All of those lines are worrying in terms of the way they're going. What we try to do is to cast that problem in the broader context of balance sheets, which remains quite positive.
So generally positive response to that. AM Best has got a positive outlook on the reinsurance segment. Is that something that tallies with the conversations you've been having?
I think so, yeah. Capital has recovered. In 2022, we had a big impairment due to that interest rate spike and then Hurricane Ian to a much lesser extent, actually. As bonds have pulled to par, capital has recovered, and as the yield curve normalizes, that should create more capacity, especially as the short end of the yield curve comes down. That's all very positive for reinsurers. I mean, I think it's important to have a positive outlook on the reinsurance sector right now because I think these are some of the best underwriting conditions we've ever seen. If you look at where reinsurance is attaching, it's very high. Pricing is at historic highs in some lines of business, so it's a very strong underwriting environment. But that's all well and good. The question now is reinsurers as partners. Can we work together with cedents, with capital providers, brokers, to bring that capacity to insurers? Because insurers, depending on the region that you're talking about, are having quite a difficult time. They're wearing most of those losses, right? And it's time for reinsurers to step in and help out.
So you've mentioned hurricanes a number of times in the answers that you've given. We're in the middle of the hurricane season, as we always are in Monte Carlo. It's predicted at one stage to be more intense, more active than usual.
Yeah.
How do we think that reinsurers will react if we do have a capital depleting event?
Well, it's interesting. I think if we had, I haven't tracked it very closely, but yesterday there was what was going to be a Category 1, maybe approaching Texas or New Orleans. An event like that, surprisingly, wouldn't affect the reinsurers as much as it would in the past. It wouldn't attach because, again, attachment points are higher up, retentions are higher up. And so I think that the sector can absorb one hurricane before the end of the hurricane season. That would actually maybe arrest some of the capacity coming in, or actually it might not if rates went up. I think that the sector is ready to absorb something like that, even in the environment that we're in now. What is different now, though, is that it's not necessarily one tropical cyclone that can move the market. It's all of the little secondary perils, or what we used to call secondary perils, whether it's SRCC, political violence, European wind, flood, hail. A combination of all of those, plus a macroeconomic event, plus a hurricane, that could be something. But one hurricane, I think the reinsurance sector can absorb.
So you've talked about capacity coming in. We haven't seen a lot of new startups, as you might expect to see at this stage of a hard cycle. Why is that?
Well, it's a really good point. If you look in real terms, after September 11th, we got about $40 billion of new capital. This is inflation adjusted. If you look after Hurricane Katrina, it was about 50. After Hurricane Ian, even if we kind of cheat and extend the entry period as long as we can only get up to about 20. Why is that? Well, there have been a lot of reasons. I think early in the capital raising process, we were in 2022, and that was quite difficult time with inflation being higher, and asset values were impaired. So a lot of asset managers and capital providers didn't come to the table just because their own portfolios were impaired at the time. After that, we had a roaring recovery, really, in the asset markets, and it was hard to beat the returns in tech and other sectors. And so, insurance capital didn't flow in, even though if you're just looking at the reinsurance sector, it looks like the very best time to invest ever. I think that investors are, getting clued into that now, and we will continue to see capital come in. But you're right, capital and risk are relatively finely balanced in a way that they really haven't been, I would say, since the financial crisis or the immediate post-financial crisis era. So, again, if you're a reinsurer, this is the time to bring capacity to the table. It's extremely valuable. It's very highly valued by cedents, and we'll put it to good use.
David, thank you very much indeed for joining us.
Thank you.
For AM Best TV, I'm Richard Banks.